Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. Welcome, Jonathan.
Hi there, everybody. And so Kai is on his boat today, I believe.
Yes, he's on his boat.
Not the best weather for it, but he's on there relaxing this afternoon. So it's just us two.
His brain's hurting after doing all that quant work on the modern wealth formula. Apparently, there's a Nobel Prize in mathematics coming for him pretty soon. Worst case scenario, we know those FIFA guys are bribable. We'll get an award from them anyway. So we've got the cash. Look, record highs in AI frenzy. For those of you who watch the morning call, it probably sounds like a familiar title because it pretty much I've had to use a variation of this all this week, essentially. So as you can see here, like down in that bottom left corner there, Micron, just a lazy 25 for the week. AMD 17%, Qualcomm's like 20 odd. Snowflake, which is not as some people believe, it's not a millennial business. It is a data like software cloud data. It's like that second tier down from data centers. It's like a second. So
it's not the Gen Z HR company.
No, it does. No, it doesn't need a flexi day every week and have to work from home. And it's software related. So it was up 40% on its earnings. So
wow.
They're not mucking around. But like Dell, good old Dell. Like server demand was up 18%. So
wow.
And probably nearly 30% for the week. I can't quite read that. I'm getting a little bit old, but it's in the down near Intel there at the bottom left hand corner. So it's pretty dark green. The poor old oil companies and Costco the biggest losers this week. I do recall I can't even spot United Health anymore. But it had a shocker at one stage. It used to be, these AI companies getting more and more massive, and United Health just screwing the pooch more and more.
And
the square gets smaller.
Yeah, and the thing for me is that, like, the word trillion gets like passed around like nothing now. So Micron just crossed the trillion market cap, and also Anthropic. Mainly through the use, the high use of tokens. They raised 65 billion at a 984 billion valuation on their Series H rounding. So, absolutely massive.
And I'd like to think I was a massive part of that because I'm currently so for those of you who use Claude Cowork, and because I'm not like anywhere near Kai's in terms of development, let's just say my efficiency of use is not quite, at AI's level. I'm running a laptop to my left and my computer, and I'm running at a session limit 3 times a day. So that's just on. Well, I think it has enabled us to do quite a bit of work.
It also shows that the model works. It's just like anything. Like if you give something that works and give a chance for people to pay for it, they will. And I often say it's kind of like we got we leased a printer in our office, and like obviously now that it's all taken care of, we're like print, and it's the same thing with AI and tokens. It's like, hey, this thing's solving the world's problems for us, and all we have to do is just hit enter, and it's just like go.
The annoying thing is, it's like the session limit's annoying. It's because it's like, well, I need this job done. Like, I'm happy to cough up, like, and it caps you. Whereas Perplexity, like, where it brings in a whole heap of different models, and it is actually pretty handy, and it's got pre-built skills. we learned a little lesson there. I'm sitting there looking at my email going, why are all these Perplexity emails coming in? And I'm like, it's been auto reloading. So probably if you can get some shares of Perplexity, but it'll it look and I did suss out this week my massive token usage. Actually, we because of Mosaic and things, and I've been helping out, being a dev and all that sort of stuff, help back up our research and development grants, because we're a tech company now.
That's it. It's MPC.ai.
Yeah, look, if it's good enough for Meta, it's good enough for us. All right. So look, BHP and Rio. I mean,
yeah. So that they're at new high. Oh, BHP is not quite at record highs, but yeah, BHP and Rio are carrying.
Well, this is this morning, so it didn't. Mm-hmm. It doesn't take into account today. And look, I mean, this is the whole mindless green robot argument that you're going to have a bit of a chat about today.
Yep.
And but it used to be CBA. And now the mindless green robot's really just propping up. And look, I'm way more behind that because we've got a heap of BHP and Rio. CBA not so much. Didn't really care about that. I wish it had started helping Newmont.
You will. But we'll see. Obviously the gold stocks are still ranging about. But yeah, like. As I will talk about the mindless green robot, it does help out as Newmont gets bigger as well.
Yeah. So okay, just a very quick rant alert. So the ASX had its worst day in ages, down. I think it's 24% for the week. Look, I mean, I used to be head of the Traders Association, represent all the individual futures traders. We were 30% of the market at one stage, and like paying, millions a month to these guys, and they wouldn't talk to us. And that horrible culture of basically they just were mates. It's horrible culture has been unraveled by ASIC, and now they've got a holding bond on them, and they've got to improve all this stuff, etc. And they've screwed this settlements thing. Apparently they took another hit, and it's delayed even further. And everyone, everyone sort of get why we're looking at US stocks and things, and it's not just about the fact that they're an inherently more bullish people. So look at this heat map for the week, and then look at this one. Which market would you rather play in? Between the Labor government with the CGT and the negative, and all the changes, and then the ASX being I'm only pausing because what I want to say and the line between a defamation case is really slim. So that's where my headspace is at. But the Australian investors deserve better, and the market deserves better here. And there are really smart companies, and we would have Squares like as big as CBA and BHP and stuff in tech companies if we bothered to actually support it here from an exchange level, like the likes of Canva and things like that. So so I'm sure the ASX isn't listening, and if they are, just pull your socks up and just get be better. And we don't want to be trading US stocks. Like if we had options here, we would take them. And mid cap fund managers need to grow up here as well. So but that's rant over.
Okay, good. So and just on that, the point I want to make as well is that, and I've said this on Ausbiz, is that capital is mobile. So if that's the problem here, is that like you can. Here in Australia, we have a natural advantage. We have a lot of resources. We export a lot of food. We've got so much space here, and we've got so much going for us. And obviously, our isolation used to be a bug before COVID. Now it's a feature. But the thing is, if you're a venture capitalist or just a fund manager, where would you invest? You invest where the conditions are favorable. So the problem is that ASX is shooting us in the foot. The Labor Party is doing the same thing. and capital will just flee. And that's kind of what, and we're seeing it amongst ourselves. Like we're not venture capitalists or huge fund managers, but obviously we're seeing opportunities overseas, and we're like, well, it would be a disservice to our clients.
Yeah, let's look at our growth products, US stocks, and the Global Alpha Recommendation Service, and structured investments, because people are just over it. I mean, look, like we're an innovative, like we invented bloody Wi-Fi, the cochlear implant, the Hills hoist. They're and then even like Google Maps, like two technologies founded in a Sydney founded company that were absolutely key to Google Maps. And like, and it's just like, like we've got all these decent innovative minds, etc. And then like in cervical cancer vaccine with like technology as well, like, so it's been sold offshore as well. Like it just really, I think, I would like us to be better at it, and it's not I'm not ranting just for rant's sake. I legitimately want the ASX to be better. And there to be more capital and things like that, and the government to be, more, more pro innovation and more like, I mean, we can only dig things out of the ground for so long. The whole, if you're shipping it out, it's all you're left with is a hole in the ground, and we don't even tax it. So, like, let's actually do something that. Anyway, again, but that was a restart of a rant. Now that's rant part 2 over. I'm gonna quickly talk about inflation, and then JT is going to take center stage and talk about the the ETF and passive flow. PCE was out last night, as you can see, starting to kick up. One of the beautiful things that I loved hearing out of the analysts last night is, it might be 3.8, but we're expecting 4. 3.8 is still 3.8. And core at 3.3 is still 3.3. And those little lines at the end there, I mean, that's like, this is a 4 or 5 year chart. That's what's called it. Well, shout out to Jackie. If it was a candlestick chart, that'd be a green candle. So, and the momentum's probably going to keep going, but we're starting to get precursor numbers that we were getting back in 2022, and look at where inflation was in 2022 on that chart. So, and like there's all this positivity around a ceasefire. All they've done is extended another 60 days. So there's still not a lot of ships going through. They intercepted 5 drones that were trying to attack ships last night. The Iranians trying to attack ships. The US have attacked ships in the last 24 hours. Iran sent a ballistic missile. Israel's increased attacks and killed 14 people in Lebanon. Like, I don't know where everyone's got the idea that, like, this is, if anything, this is escalating. But I think we've got such short attention spans. So that chart continuing to trend higher is a disaster for equity markets, and there is no amount of data centers we can build in the world that's going to offset it. So, I'm still, probably you take one guess whether I'm going to be bullish or bearish this week. So yeah, but I mean, look,
can I just add something on that inflation number as well?
Yeah.
So what you have to remember as well is that so inflation, it's kind of like compound interest. It just compounds. So this tick higher. So if you think back what the prices were in 2022, a loaf of bread, whether a basket of groceries was say $100 back then. That inflation number is actually ticking on a higher number now. Say the base is now 120. So we're going to start feeling, yeah, exactly. But what I'm saying is, like, so you kind of have to, like, that chart shows inflation in segments of time.
Oh yeah. Only 12 months today. Yeah.
It should actually be like layering on top of each other, because obviously, everyone's feeling the pinch now, and then now the inflation's actually accelerating as well. So it's going to get worse and worse. So yeah, as you said, disaster for equities markets, and I guess in general, consumer discretionary stocks.
won't be able to necessarily bring that up, but but I may be able to. I might be able to bring that next week. I'll make a compounding. Maybe, let's try and be positive. Maybe I won't bring it next week. So our market, well, we bounced back a little bit today. Our market and the Hang Seng. I've got a distinct feeling that I've got the Hang Seng and the China A50 technicals around the wrong way there for some reason. Because it does look like because one's, either way, Hong Kong isn't negative. Yeah, Hang Seng's up, and so just switch those over there. Sorry, people. There's probably some pretty confused people from the morning call as well. But don't
forget the Chinese red is positive as well, so it could actually be the right color.
Yeah, look, there you go. Well, yeah, it's not, but because it says strong sell in it. Either way, so we all lost this week. The S&P was up 1%. And but it was basically pretty much that. All of that's just Micron. And then the Nasdaq up 2.5. Like it was just that the Russell being up is fine. Like that's like, but look, the Dow's up 0.3. So and most of the markets were down. So look, I'm not going to say that we were right, but I'm not. They've been pretty marginal. They're pretty I'm not going to change the rules now. I'm just going to shut up. So crude being down is obviously the big thing.
Wow. Yeah,
down 16 or 17% for the month of May. Everything I'm hearing from people in the energy industry is that reserves are getting drained and this is going to get worse. But yet here we are. So I'm not entirely sure whether there was a lot of people talking about June, including us actually, when we wrote that article about that was a probabilistic thing, right? And when we released that, I'm like, I'm going to be so wrong with this, and I'm going to get pinged for it. But it was like end of June or May, June, so we might be okay here.
So can I just? I would like to. So something I listened to in podcast this week. So Doomberg. He's one of the more popular financial writers out there. And so before the war started, there were reports that China had 1.8 billion barrels of oils in their strategic SPR. When the war started, imports actually dropped like a cliff into China. And so the Doomberg's sort of thinking is that China actually has underreported the amount of reserves that they had, and they've been flowing that into the market, and that's what's keeping the actual
smart.
And Doomberg just said, like, if you're China, like you filled up your tanks at call it $60 a barrel, 65, and now that it's 90, 95, they're just selling it back into the market at that price. And he said strategically being a great trade, and he just said. He's dealt with China from a commodities perspective. He said they're very, very savvy traders themselves. So that could be why, even though the energy, a lot of energy guys are saying that, we're going to head into a disaster zone soon if the straits don't open up. But here we are, end of May, and every time I go to the petrol station, there seems to be petrol flowing out. So that's kind of what we're seeing on the ground here. So shout out to Doomberg there. And I doubt
it did. Yeah, and fuel prices have come back down. Well, diesel's back at 220, and but there's tax subsidies going on. Well, there's a reduction in tax. But yeah, so. Look, I've just got a feeling that it'll come home to roost at some stage. But anyway, so I'm just going to give you an intro here, JT, and then I'm going to sit back and just hear. So this is just about this, essentially passive inflows, and that obviously you can see by this chart the inflows have increased quite considerably. But how it's kind of changed the market and that passive bid, and where we're probably a little bit silly being bearish. You know, in that US market based on the things that both of us have just said in this podcast, where it's such a well-focused market on AI that it's getting global flows and yada yada, and that passive bid just grinds against fundamentals because it doesn't, the fundamentals don't matter. But yeah, and it was a really good concept that you introduced to me. We call the mindless green robot, and I thought it'd be a good thing for you to explain. So take it away.
Sure.
Mate.
Okay, so the mindless green robot is actually Mike Green's work. So Mike Green, very smart guy. He's like a chief investment analyst or something like that at ETF provider called Simplify Asset Management. But he's been talking about this for a very long time, and I'll go into the history of it soon. But what he describes that as is that passive is actually an incorrect definition of it. So he actually just calls it the most simple algorithm in the world. Is that basically if money goes in,
right,
it has to go somewhere. Like money comes in, I buy shares. Money comes in, I buy shares. And all it does is just goes into an index, and it's based on the market weight. So obviously, the Mag 7 would get, let's just say there's $1,000 going into the S&P 500. The Mag 7 would get, say, $400 of that. And then the rest gets distributed amongst the rest of the 493 stocks. So that's why he said it's the mindless green robot, and it's not actually passive investing, because it's actually the most simple algorithm in the world. And it just means that if money goes in, it goes into the stock market, and hence that's why the stocks go up. So this is actually so that first chart was the growth of ETFs in general. This second chart, and this gets released on a monthly basis by the ASX themselves. Global X puts it into their monthly newsletter, and I always just check out that data, and you can just see that $20 billion. That's 2026, and 2025 was similar, but you can just see like we've hit April. So have a think about what's happened at the start of this year. Like in January, Maduro was captured, and then late February, Trump invades Iran. But have a look at the inflows. It hasn't budged 1 inch. It actually just keeps flowing in, and actually has set a record. Like, so we've had $20 billion inflow into ETFs into Australia already, and it's only April. And have a look at some of the previous years. Like you wouldn't hit 20 billion till you well into August or September. So it's just enormous amounts of money going in, and it's just basically how the super system is designed here in Australia. Is that so the people, if you want to employ someone, you have to pay their super, and it has to be 11% of their wage. And they're actually changing the rules as well, so that you have to pay the super as you pay the wages now, instead of having to pay it at the end of the quarter when the batch is due. So that money has to go somewhere, and it just goes into the largest companies, or it goes.
Well, and the minimum went up. The minimum went up in.
So it went from 11.5 to 12.
Yeah,
from
the
memory.
minimum. See how it gets steeper here in June, July.
Mm-hmm.
It might have been 11 to 12 or something. It was a bit but it just, that's the reason for it to accelerate. But I mean, that doesn't justify but look, either way, that's accumulative inflows. It just keeps getting steeper, right?
Exactly.
And you just prompt me when you want me to change the slide, by the way.
Yeah, okay. No, but so Mike Green, he's the guy that's made all of this work famous. He actually produced this chart on a few podcasts that he's been on recently, and he just shows the amount of money going into the US markets on a rolling basis, on a monthly basis. You can just see there. So that massive tick up on the right is money that flowed in from the April lows into May, and that's why the US markets are at all-time highs. So S&P is at new all-time highs, Nasdaq's at new all-time highs, and that's the mindless green robot doing its job. So I think on the podcast, Mike was saying that I think it worked out to be $440 billion worth of flows that went into index itself. And a lot of it's just systematic, meaning that they're not trying to time the market or react to the war or geopolitical events. It's just things like vol targeting funds or pension funds, doing their rebalancing and such. It's like that's the money that has to go into the market, and you can just see it's a record inflow, and that's why we're at record highs. And the minus green robot rolls on. And if you go next chart, please. So the reason why I highlighted this whole thing is that Mike Green actually saw this phenomenon back in 2018. So this is actually an event called Volmageddon. And what happened here was, so Mike Green actually talked about this event maybe about a year before it actually happened. He said that if passive investing or those flows become more than 60% of the total flows into the market becomes very, very lopsided, meaning that because there's not enough discretionary money in there, if there's a shock to the system, there's no smart traders in there trying to pick lows or actually things. It's just like the minus green robot just goes, oh, it's lower, or people are asking for redemptions, sell. It's not like the minus green robot will be there trying to pick value or anything like that. And so what happened was there was a VIX ETF out there that was shorting VIX all throughout. He saw it about a year ahead of when it actually happened that, hang on, there's, I think, 80% passive flows are controlling this one particular market, and this will blow up if there's a vol shock. And what happened was there was a vol shock, and basically overnight, this whole ETF collapsed. It went to zero. So everyone had money in there, it got dusted in one go. And that's kind of his conclusion on, and this is where he's saying that this is the scary part of the minus green robot, is that it's the same thing is happening in index ETFs. Which is what happened in the vol ETFs as well. So his number is, I believe, 65%. Once there's 65% passive flows or mindless green robot trading, it means that there's no more price discovery. You're just beholden to that actual thing. And he said at that point, it's a mathematical certainty on, it's not if, but when this whole thing blows up. Now, he says that the current rate is about 53% and growing at about 4% per annum. So we still have some time left. But yeah, it's just something to be wary of as the ETF popularity continues. It's like, okay, we got to keep an eye on this because we're going to have very, very distorted markets in the future. So that's my little sort of educational piece on the minus green robot.
Well, I mean, look, and it does explain why, when there has been an absolute, I mean, anyone who watches Ausbies, we have Ausbies on the background, that TV back there quite often, and listening to Bloomberg every morning on radio on the way to work and things like that. At the moment, it is just a parade of analysts coming on going, what the hell? What are we doing here? Like, why is the index here? Like, where is this money coming? Like, oil's still at $90, like, and on an inflation adjusted basis, oil's like historically cheap at $90. Like, gotta remember, back when we had the oil was at what $110, whatever it was, like previously, that's like we're talking if you adjust for inflation, that's that's like oil being at 200 or 300, like. Because you've got to Canada, like even if you go back like 5 years, where we're sitting at the moment at 90 in oil is like the equivalent of like $75. That's cheap when you've got like a third of the world's supply cut off in the scheme of things, and and it just is, I just don't like the everything's okay thing, and I can't find a single fundamental. An economist or an analyst is like, and then you get the parade of like very like stockbrokers, who are like, oh no, earnings is awesome, it's great. Like this is a record earnings. It was up 27%, which they always like leave out that bit. It's like, well, when about 2/3 of that was Anthropic. Then their valuation uplift, which actually increased the earnings of 3 out of the 4 hyperscalers and a bunch of other companies. And the OpenAI uplift as well, which helped Microsoft and things like that. Like that was 15% of earnings. But yeah, like it. But it just goes to show, like it, and I think it almost, because the bears get short, they start getting short too way too early, and that's where that, I reckon, that chart you had where it really spiked high. That was that is flat out short covering.
Oh, absolutely.
And that's where that spikes come from. And I would imagine, or basically not having enough compared to your benchmark, and then getting caught out, which is like in a lot of funds mandates, like they don't really do. The benchmarking thing, I'm not a fan of, for some funds in particular. But anyway, so that's another rant. I'm not doing 2 rants in one podcast. I'm 1 rant a month. And non-farm payrolls next week. That'll be the big dog. Palo Alto and CrowdStrike as well will be interesting, and Broadcom, I would imagine. Palo Alto, CrowdStrike. We've still got half of our cybersecurity pair on. For those of you out there who are long-time listeners, but not first-time purchasers of some of our strategies, basically that one we put on the 9th of March, that pair, as part of the Software Survivors. It was a 12-month strategy. We just took it off for a 250% gain on invested capital. And those stocks have rallied. Both of those stocks have rallied 65%. We still got half on. And that was one of our structured investment thingos. There was another couple of pairs in there, Viva and Promedicus, and Technology One and WiseTech. T&E's gone up, but WiseTech still dragging the chain. But yeah, so we haven't got a thematic one at the moment because we think the market's too high. But they've been very popular. So you can just go to the website and subscribe, find out when the next one's coming up. They're sort of SOFI, or sophisticated investor generally.
Yeah, but I think well, obviously we just did the buy the dip, but we do have to come up with the I have been trying to scan and trying to figure out what the next thematic is. But yeah, it just looks like lithium continues to run. So maybe some of those rare earths, as I've been talking about, they haven't run yet. So, but either way, we'll keep you guys informed on.
We do.
When we do figure out what the next one is.
Well, we for the market outlook at the start of the year, we did MP Materials, which is rare earths, and copper. In FCX in Fremont McMoran, it's up 100% so far. It's only 5 months in, and keeps going. So yeah, look, I mean, they tend to come up when there's a good idea. There's not like a regular intake or something. We did hyperscalers last year, and we did robotics last year, and then a few people wanted to invest around the market outlook, and then we did the software one. We're pretty big believers that there's going to be a dip. So I dare say you've probably got a couple of months at absolute minimum, because everything's a little bit expensive at the moment. But yeah. So
and then also we could sorry, just want to say we possibly could look at maybe those something protected on the bearish side as well. So yeah, that's the we'll have to hunt around. Yeah.
Yeah, look, based on our track record at being bearish, maybe stay away from the bearish ones, eh? We just typical overthinkers. So sadly, Kai's the only one batting at 50%, above 50%. We all got it wrong last week. And one thing.
Is that fear and greed? This week's one, like, is that 60?
Yeah.
Okay.
Yeah.
Oh, I thought it'd be greedier. I mean, like, Nasdaq, S&P at record highs. I thought it'd be a little bit greedier.
to be honest, with about 10 minutes to go, most days it's been in the negative. And then it just like finds something into the death. Like it's like watching a TV show where you're like, oh, is he going to get out? Are they going to escape? And then it always pans out for the S&P and the Nasdaq. Because I'm listening to Bloomberg in real time, and they've got they're giving updates in the last half an hour on Bloomberg Radio, which comes out of New York. And it just is like, the Dow is still down. Oh my God, it finished up. So it's so stupid. Anyway, it probably isn't greedy enough for me to be bearish this week. However, I am going to be bearish this week because I can't not be bearish. Just a little secret that I'm going to tell the viewers. The reason we've got a bull and a bear for Kai is that next week, no matter what the market does, he's going to be wrong. I'm just going to delete one of the other because we need to. Us old blokes are going to peg him back a little bit. So I'd really appreciate if the viewers just keep that out of the comments. And look, he doesn't do social media, so there's no other real way to get in contact with him. So we'll just got to. The old blokes are just got to hamper these young guys, these young smart guys where we can. So he's a bull bear. We just work out which one we're going to remove next week. We may even JT just make sure that maybe we might flip ours as well. We'll just see how we go. He won't listen to the show. He's on his boat. There's no chance.
Exactly.
So. But we'll just keep that between us, people. But yeah, but we've that pretty much wraps it up. And I think we've managed to get through. I don't think we mentioned Trump once. That's right. There should be strings falling from the ceiling.
I think we first thing. Either way, let's not bring him up. and
No. I don't want to bring him up. But So, but look, next week I think we've got a few economic numbers out. We're going to be like batting. I think we've got some fixed coupons and runs to do. There was excess demand in that by the dip that we're going to do before the end of the year. So we're going to be pretty busy on the structured products front. And obviously coming into end of financial year, everyone will be wanting to do their portfolio reviews and things. If you want to do a portfolio review leading into end of financial year, because obviously these tax things are coming up, just go to our website. There's a big gold button that actually pulses that you can click on, you upload your spreadsheet into it, and then you can pick someone, pick Kai. You pick someone to one of us, or if you don't care who does it, it all goes through the same software, and then we'll give you a bell, and we don't hassle people after they, if you don't want us to call you back, it's all good. It's not a problem. Because thankfully the software does a lot of the work these days, and we talk for a living. So, which I'm going to stop doing right now, so we can enjoy our weekend. Everyone have a great weekend, and we will speak to you next week.
Thank you.